Commercial real estate lending has fundamentally changed. Most borrowers walk into a bank thinking their deal is ready, only to be hit with a pending or a flat rejection. Why? Because you are looking at the deal as a property, while the credit committee is looking at the deal as a math problem. Look at this dashboard. We run a strict 1.25 times debt service coverage ratio, DSCR, as our absolute baseline. If you walk in with a 1.2, you aren't just a little off, you are mathematically unlendable. Most people ask me, why is this so strict? It's because the banks have changed their risk appetite. 3 years ago, a 1.15 DSCR might have passed. Today, with interest rates being this volatile, that same deal is a guaranteed rejection. By using this dashboard, we aren't just guessing. We are stress testing your numbers against the current 2026 lending environment. We simulate a 200 basis point shock to see if your property holds up. If it doesn't, we stop right there. We don't waste your time or the lender's time until the math works. We take every file through this stress test to ensure your net cash flow can withstand institutional scrutiny. If you don't know your own sensitivity metrics before you apply, you are already losing. But a stress test is just the beginning. That's why we built the Core Capital Stack Audit. Most brokers focus on getting you a loan. We focus on the structure of the capital itself. Look at these friction points. Your senior debt, your mezzanine layers, and your sponsor equity have to move in perfect synchronization. If your senior debt is shocked by a 200 basis point interest rate jump, and your mezzanine maturity is misaligned, the whole stack collapses. Think of your capital stack like a chain. Your senior debt, your mezzanine layers, and your sponsor equity are all links in that chain. If your senior bank is tightening their requirements, which they are doing right now, that pressure immediately shifts to your mezzanine layer. If your mezzanine maturity date doesn't align with your senior debt's refinance schedule, you're looking at a liquidity crisis 2 years down the road. We find those timing gaps before you sign the term sheet. This is the difference between a deal that closes and a deal that gets stuck in legal limbo. We isolate these gaps. We don't just find the problems, we provide the institutional-grade fixes that bridge the space between a rejected application and a funded closing. So, what is the end goal? We aren't here to just submit a loan application. We are here to deliver an institutional deal package. When our files hit a credit committee's desk, they look different. They are polished, stress-tested, and already contain the answers to the questions the lender hasn't even asked yet. That is how you bypass the back-and-forth delay and get straight to a commitment letter. You're looking at a 3-step process to capitalize your next acquisition. Click the institutional onboarding link below. Complete your preliminary sponsor profile assessment. This is how we know if we can actually solve your deal's specific structural issues. Schedule your one-on-one capital strategy session. Don't send another file to a lender until you know it can pass the committee test. The capital is waiting for the right deal. Let's make sure yours is the one that gets funded. Click the link below and let's get started.